the next 6 to 9 months, so the budget of next year and the election next year, will be critical in either government policy and the Bank of England policy as to how severe this situation goes, or on the upside, how quickly it can be managed out. Hey everyone, welcome to another edition of Super Prime UK with your Super Prime MJ Group valuation specialist, myself, Rob Cohen.
Myself, James Wild.
Hope you're all well, dealing with the extreme economic volatility and uncertainty that we are facing. I have told you time and time again, uncertainty is the new certainty. I repeat, uncertainty is the new certainty. And what is clear, James, is every week we are being updated with economic data that is really challenging market conditions.
Yeah, in terms of a lot of the data which we're seeing, a lot of it is that sort of 2 or 3 month lag, especially the most reliable and official data. Obviously, we've got the UK economy data which come out this week, with the UK economy contracting by 0.1% for May. And then if we sort of fast forwards somewhat to what's happening now in the market in terms of financial performance and economical performance, that's reflecting on the property sector. It's a bit of a two-tier market, Rob, which we're definitely seeing at the moment. London has been fairly robust, especially in the prime central London sectors. In terms of the London data, a couple of weeks ago, it was one of the highest weeks we've had in terms of transaction volumes. And in that super prime space, around 60 to 70% of all those transactions have been taking place with cash purchases. So a lot of them have not had that sort of bank or surveyor input, so have been sort of completely off market. So it's sort of relatively few people sort of tracking and monitoring those, but some of the particularly strong off market agents obviously just sort of discreetly sharing some of those details.
I think important for people to understand that space is trading at very similar levels to 2021 and 2022. Not far off those, what we would call 5-year highs for trading. At the same time, where mortgage rates and interest rates have gone now, James, we've just gone slightly above the Liz Truss crisis budget figures of 6.5% for 2-year fixes, and now we're reaching 6.7%. So we've just gone above and beyond that now, and that really is a difficult position for the mortgage market.
Yeah, so the average now, I think it's, like you say, just under 6.7. I think it was 6.65 in terms of the highs for the 2-year fixed. And that's actually a 15-year high now for those. So whilst in the last 10 years or so, the 2-year fixed has been the most popular product in the market. It's actually the one of the highest products in the market in terms of its cost. So obviously the cheapest in the market now, Rob, is that 5-year fixed if people want sort of high levels of certainty on their repayments. However, if rates are to come back in, you're going to be overpaying on that sort of second half of your 5-year fix, certainly. And then some people taking on tracker mortgages, that's one of the most popular at the moment, which we're seeing in the market there. Just switching to data and economic performance, Rob, in terms of US inflation, that's actually dropped to around 3%. So they've had some inflation easing, which certainly in the US, they're hoping for some easing in terms of the rate rising, and how the Bank of England have operated for the last 9 to 12 months. We've often followed suit in terms of the rate rises and also the incremental rise of what the State Reserve has done in the US. So if the US maybe pauses in terms of its rate rises, Europe and the UK could start to follow suit there, and hopefully some of the peaks, which they're saying now in terms of the base rate, maybe get revised slightly down. We don't exceed that sort of 5.5–6% level, but we're going to have to just wait and see what the summer and autumn months bring for us.
Yeah, the markets are betting currently on 2 further rate rises in the UK and the Federal Reserve, possibly 1 more rise. And so we will watch that space, James.
That's it. And then just in terms of the past week's property data for London, there's quite a raft of super prime deals, Rob. Sale of the week this week down on Park Street, just over 18 million. Another super prime deal. New instructions, 350, so quite strong there in terms of properties coming to the market in London. Under offers 178, while sold properties at 121. So fairly encouraging data for the sort of the London micro market. But if we take a look at the rest of the UK, obviously sort of the Halifax house price index, that's showing quite stagnant data. House prices reducing month on month by 0.1%. A bit of downward pressure on pricing. So like we were saying on the previous show, it is more of a buyer's market there. So there are sort of deals to be had there with a bit of uncertainty about where the market is going and what sort of level of drop we might see in the property prices.
Thank you, James. Yeah, just to wrap up for today, the challenges that we're facing in the lending market, specifically mortgage lending, residential and commercially, is extreme conditions that, like James mentioned, we haven't seen for 15 years, and possibly we could even get to historic levels of 30 years ago in terms of what happens to the market. The next 6 to 9 months, to the budget of next year and the election next year, will be critical in either government policy and the Bank of England policy as to how severe this situation goes, or on the upside, how quickly it can be managed out to get us all in a better position. What I can assure you is we will be with you on that journey, giving you all the intel and data that we have to support everyone in lending, sales, credit risk and finance as we work our way through these challenging economic conditions. James.
Thanks, Rob. And just to summarise there, in terms of where we are currently, the property market isn't quite shutting down for summer yet, but it's certainly slowing down as we move into as we'll move through into August, where traditionally a lot of people are take their summer holidays and are away. So with that sort of slowing of the property market, we're obviously seeing stock levels diminishing, Rob, there. So we're going to have to see what levels of activity we have both in London and nationally in the UK in terms of transaction volumes over the summer. Particularly it's going to be sort of quieter period, and it might be slightly more extended in terms of that quiet summer period than we usually see. So we're going to have to monitor that moving forward, and obviously any rate rises, Rob, could then have a knock-on effect in the economy. Hopefully we'll get some more positive news with the next inflation data, which might give us a small boost for the economy.
To close on a good note for this week, deposits are on the up, and for you savers out there, great returns in that, the best have been seen for 15 plus years and pushing for more. So great news for savers, great news for deposits, and that's all for this week. And thank you everyone for your support, watching, listening, and all your feedback, especially the clients I've been with over the last week or two. Really appreciate it. Really value your support, and we will be with you and help you on this journey. Thank you everyone. Thanks, James.
Thanks, Rob. Thanks so much, everyone.